The depressing mood hovering over Blue Monday was bucked later in the week as stocks climbed off the back of improved Eurozone consensus and quarterly reports out from America. Following the S&P's decision to cut many Eurozone countries' ratings, the emphasis was on the multiple debt auctions. On the whole, the results were promising. The Netherlands, Belgium, Germany, Spain, France, and even Greece held successful auctions with yields hovering around or below previous levels. Fitch's Parker reiterated that Greece is insolvent and will default, though. Figures from the UK showed inflation at its lowest level since last April, but there was an increase in those claiming benefits. Unemployment hit a 17-year high, and the youth segment, people aged 16 to 24, reached its highest level since records began. Chinese quarterly growth came in just above forecast at 8.9%, its lowest level since late 2009. Copper and gold prices jumped as a result. The World Bank has warned both China and India to expect further global slowdown, and the Bank of Japan downgraded its assessment of regional economies. EU President Herman Van Rompuy called for a full embargo on Iranian oil imports starting from the 1st of July, and the Saudi oil minister called for the crude oil price to stay at $100 a barrel. However, a brief fall in stockpiles saw the price climb above $102 on Thursday. The Philly Fed manufacturing figure came in lower than expected, but overall, we see the picture improving in the States. A number of big American banks and tech companies reported this week. The weakest report came from Citigroup, which missed targets and suffered an 11% fall in profits. Although Goldman Sachs reported a 58% fall in profits, it still beat analyst expectations, and shares rose back above the $100 mark. Morgan Stanley similarly saw revenue fall 26%, but also beat expectations. American Express saw fourth quarter earnings rise 12% as cardholder spending continued to rise. Wells Fargo's figures were encouraging, posting a 20% increase in fourth quarter profits. However, the most promising results came from Bank of America, the nation's second largest lender, which brought in a profit of $1.99 billion and earnings per share of 15 cents, which, compared to a prior fourth quarter loss of 16 cents per share, is a remarkable turnaround. Thursday saw the tech giants come in with gains, but with differing success opinion. Google reported a rise of 6% in earnings, but shares suffered because it was short of forecasts. Microsoft conveyed an increase in second quarter revenue at $20.1 billion, but a slight decrease in net income. IBM stated modest gains in both revenue and profit. In non-reporting news, Yahoo's co-founder Jerry Yang resigned, and Eastman Kodak filed for $950 million bankruptcy protection, with their inability to keep up with global innovation cited as the reason for their decline. Now, equity volatility was not just confined to the U.S. Carnival saw shares open down 20% Monday morning following the Concordia disaster. The catastrophe is expected to cost the company somewhere in the neighborhood of $90 million in earnings this year. Barclays shares also shot up over 9.5% on Thursday as investors' risk appetite returned to the banking sector. Figures out next week see Euro manufacturing and flash services, UK public net borrowing, as well as retail sales from Canada out on Tuesday. Wednesday is data-packed with German business climate, UK preliminary GDP, American pending home sales, and crude oil inventories. New home sales come on Thursday, and Friday sees American Q4 GDP. Companies reporting next week include Renishaw, WH Smith, Mises, and Anglo-American. It's another heavy week of statements from America, including many regional consumer banks, Caterpillar, Eastman Kodak, and AT&T, to name a few.